Hey traders, welcome to Top Tier Outlook for the week of October 9. Hope everyone's having a great weekend. Stepping away maybe from a football game for about 20 minutes. I'm going to be preparing for the Top Tier Outlook newsletter as well as the coming week. So welcome as always. All right, so let's kick it off with a quick look at where we are on the open. Remember, where we open on Sunday is not necessarily indicative of what we're going to see for the remainder of Sunday, for going into the European and UK Open, or even the US session, which is 12 hours from now. I say 12, really 13, around 7 a.m. Eastern. I kind of look at this as the first glimpse of what's happening with the US session. So I look at that from the perspective of, all right, what's this really, really early pre-market mood in the US? Or as one of my mentors used to call it, the first cup of coffee in the morning look. So as we see what's going on here, obviously, monster move on Friday. One of those moves where if you got long and stayed long, disproportionate return because we just had that scale of a move. And those are always great gifts. We had something similar in the mastery with Chevron, right? You just kind of take your trade, right? You pick your spot, you manage your risk, and then you got to pass it off to the market and let the price action do whatever it is it's going to do. We had a nice move like that on Chevron last week, and we'll see what kind of setups volatility give us. And it's really still very much a 5-minute or 1 hour type look, where for the most part, I'm going to continue to look for those day trades. That has continued to yield the most consistent pipeline of opportunities, and B, an opportunity to manage risk in the best way possible. And so between the 5-minute day trades and the 1 hour short-term swings, we're gonna stay busy. Last week, I was just looking at some of my trades from last week, and while the day trading was meh, at best, compared to the 8 weeks where it's been just spectacular in terms of opportunities and follow through, we got some swings back last week. So the swings, the overnight 1 to 3 day setups are back. And this is fantastic because the more of the cylinders we can fire on 5-minute day trades, 1 hour short term, and daily slightly longer term swings, the better it's going to be, right? We can start to cherry pick from all the different opportunities. All right, so that's what we've got here as we are kicking off the week. And I do want to mention that the NASDAQ continues to be, of the 4 indices, it's definitely the one that is poised to likely attract the most bargain hunting because it's the only uptrend of the 4 indices. The S&P is kind of wobbling, but one thing you'll notice the NASDAQ does not have that the S&P does is you'll notice we have not wobbled to that red downtrend at all. And that is where we get a lot of confidence about, well, if we know that the Dow is in a downtrend, we know the Russell's in a downtrend, pretty confident about those because the financials, the regional banks are just dragging those lower. But when I take a look at the S&P, I realize the best part of the S&P is tech. So why not just play the best part of the S&P and go directly into where tech is the most clearly and heavily weighted. And that's what we've got right now as we are embarking on the second week, or I don't know, second week of the month. Yeah, second week of the month. All right. So as always, best part of the show are your questions. So let's jump on into them. And first up, Christian, when looking for relative outperformance, yes, that's the mantra in the mastery. By how much do I mean? I'm not looking for I'm not looking for a percentage of for example, who was watching the F1 race today? Congratulations, Red Bull. Verstappen gets number 3. It didn't matter that he won the race by 20 whatever seconds, right? He just simply was leading, right? I don't need my relative outperformer to be out in front of second place by 25 seconds or whatever it may be. I just need it to be leading. So I don't mean by a certain amount. I'm just looking at it from the perspective of, is it the strongest? And it may not have to be strongest by a country mile. It could be strongest by 4 inches. It doesn't matter. So I don't mean by a percentage at all. I'm just looking at a ranking, right? First, second, third, fourth, in terms of that outperformance. So for a day trader, the QQQ is up 0.5, XLC. Nope. So this is got to remember, we're going to go index sector stock, Christian. So I'm not comparing QQQ to XLC at first, right? I'm comparing QQQ to the other indices. Once we settle on the QQQ, we have our ranking of indices, then I'll go about my ranking of the sectors, and then I'll go about my ranking of the stocks. All right. So again, don't need a percentage, just I'm ranking them, 1 through whatever. And I usually try to focus on no more than, say, the top 3, top 4, right? So I won't even go to much more than 3rd or 4th place. All right, next up, JP. First, I realized we must always look at price action as it occurs. Absolutely, my friend. One of our sector secrets, mastery traders. But when news like the Israel war, is it helpful to look back at market reactions similar? JP, I would say no. And you said like the Ukraine war. JP, I'll tell you what, I categorically just disagreed with most of what the analysis was around Ukraine war. Everyone said this is going to create the Federal Reserve to do this and they can't hike. And no, most of the time, and mind you, JP, it's interesting you mentioned wars, awful things, lots of volatility, right? So I'm always going to separate just the markets from these things that happen in the world that we're trying to trade, right? So that obviously being separated, most of the time, JP, and this goes back to when I was trading the first Gulf War from my dorm room, the dorm room from which I was slowly flunking out of college because I was too busy trading rather than to be bothered to go to class. But I would say that most of the time, traders get it wrong. They start overthinking. So I won't even think about the war, whatever it may be. I will look at trend and central bank policy as the overarching focus. And of course, volatility is going to kick up, but where, right? And usually I'll tell you, I think and this was my lesson with Gulf One, like I said, trading from my dorm room. When I say trading, I'm talking about using a phone to put in orders, right? There was no internet at the time. Gold is usually something that will move a lot. Treasuries will move a lot. Currencies will move a lot. Usually equities are pretty numb to it. And I remember everyone thought, oh, crude is going to be the big mover during that time. It was actually gold. So was it helpful? Is it helpful? No, because every event brings the pressure points are different. I guess that's the best way I can say it. And I think categorically, most traders got it absolutely wrong about the Ukraine because they thought the Ukraine war was going to keep the Federal Reserve from hiking. No, the Ukraine war was actually going to put the pressure on the Federal Reserve to deal with inflation. And so everyone was so surprised that they hiked when in reality, they didn't look at the pressure points. I always try to find where that pressure point is. Not easy. Second is, do I find a value in indicator divergence compared to price? Divergence. No, JP, you're in the room. I never talk divergence. I think it's one of those cutesy things that people like to talk about after the fact. You know me, JP. You know me well, right? Being a mastery member, I talk my book. I never use divergence. Never have. Not interested. I know it's a really popular thing sometimes to look at, but again, not my thinking in terms of looking at an indicator. I'm more of a convergence than I am a divergence. So no, I don't look at divergence at all. No, not at all. So NQ compared to slow stow in early August. Okay, let's go take a look. Early August. Early August. I don't see divergence there, my friend. Early August. So early August, we were still in an uptrend, right? So I'm not going to look at a slow stochastic. We went into a neutral trend by, say, August 4, August 7, right? In that neutral trend, the next signal we got, the actual signal we got was around the 14th, right? Around the 14th, we had another signal around the 18th. I didn't put these trades on. So, JP, it's hard for me to go back and say, this is what I would have done. I know we weren't doing those things, right? We were still doing what through August? I was day trading. I didn't trust this market any further than I could throw it. So during that period of time, it's hard for me to say, well, this is what we would have done, because I don't want to talk about anything I would have done. I don't want to talk about what I did do. And what we did do in the room was, I don't trust this environment. Let's shorten the time frame. And you would know, as with our mastery members, we haven't put any meaningful number of swings on probably since July. And that was that straight up uptrend where it was great. Last week was the first week we actually started putting on swings. So I don't see anything. And the reason I say that, JP, is I can't say now, knowing what happened, and give you unbiased analysis. I didn't take the trades then, right? I think that's the most straightforward thing I can say. Clearly, and I can't go back to 2 months ago. I mean, clearly, I couldn't even begin to. I can't remember what I thought about on, October 1. Forget August 1, right? But clearly, whatever was happening, I did not feel comfortable doing it. I probably could go back and look at the notes. You could go back and look at the notes, right, JP? And look at those workflowy notes. But no, I do not use divergence. No, I do not use divergence. All right, next up, the question from Nick. How is my weekend going? Pretty good, Nick. I appreciate it. Can we expect the dollar to resume its uptrend since the Fed may hike again? No, I don't believe so. And here's why. Number one, what happened here? What did I do to my chart? Ugh. Oh, what just happened? Did this whole thing just freeze? Oh, charts. Okay, hang on. Invalid symbol. No kidding, Toss. All right, let's try this again. So I want to take a look at the 6E. There we go. So I want to take a look at the 6E. And when you say resume, let's break this. Let's kind of break it down, Nick. So first of all, the dollar is in an uptrend. So when you say resume, it is in an uptrend right now. So pullbacks can be bought. The reason I say that is the euro is in a downtrend, right? Now, so when you say resume, dips can be bought, right? I don't want you thinking that we're waiting for the dollar to turn into an uptrend. It is in an uptrend, and it has been since the early part of September. So when we talk about the Fed hiking again, that's certainly not a probability. It's a possibility. I would say that I would not let the determining factor be the monetary policy, which is iffy at best and pretty well discounted at worst in terms of favoring, as using that to favor the long side. How about just follow the trend, right? And just say, look, as long as the euro is below the 200, as long as the euro is red, that's a bullish catalyst for the US dollar. So does that make sense? So no, in that resuming, it is, right? I hope that makes sense. All right, I appreciate that. All right, next up is I am expecting high dollar due to, JP, I wouldn't, again, where are the pressure points? Gold would be something to look at, probably treasuries. And dollar's already, kind of going back to Nick's question, JP, dollar's already strong, right? The dollar is already in strong mode. And as long as the dollar is in strong mode, very unlikely that for now, based on what I see in the euro, I'm not going to change my mind quickly at all. And I can't even change my mind until the euro goes yellow, as it did through the end of July to the beginning of September. All right, how you doing, Yee? Any thoughts on index fund investing for the long term? I know we have different approach on our weekly position. Yeah, Yee, we're going to take a look at all that on Tuesday in the mastery. And, the only one that I really at the moment, let's see here. Let's bring this in. This is our weekly chart. And, the one that's really got a beautiful trend right now, pulling back, would be QQQ. SPY is wobbling a bit, right? DIA has been choppy pretty much all year. And then Russell, I would probably be the least interested in. right? Not until maybe gets down to 160 and change. So QQQ is your best trend. And this is a weekly chart, gang. SPY is your next best trend, right? And then what about XLK? The XLK is quite strong. XLC, XLY, little wobbly, right? Financials, XLF. XLF could be interesting, not at the 200, but probably something closer to $30. So there are some interesting places to look. Healthcare. Yeah, so I can't say there's anything really pinging on the radar right now, Yee. But every Tuesday in the Mastery, we're going to spend an entire hour talking about the book we have, and I love that you're focusing on indices. I'm gonna cool it on individual stocks for our weekly position portfolio, at least probably through October, and focus on those sectors and those indices. So yeah, we'll definitely talk about it on Tuesday, but I'd say right now, nothing's a standout at the moment. All right. Next up, with the consumer apparently strong, what's my take on weakness in staples? Yeah, let's just take a look at staples, period. So if I take a look at what's going on in staples, right? Consumer strong would probably translate over to consumer discretionary. But I don't even see a lot of strength there in terms of the high concentration weighted stocks in XLY. Those aren't that great looking either. And obviously staples, which, staples are going to be a little bit more of a situation where this is possibly more of a defensive conversation than it is, this would be defensive, the way we would look at, say, XLU or XLRE, right? Staples are a mess. I'm not looking for buys here. No, not at all. So strong consumer doesn't necessarily translate over to staples. It might translate over to consumer discretionary, but that doesn't look inviting either, right? All right. So yeah, take a look. Yeah, no, just a big cup of nope there. So yeah, thanks for the question. But no, I would say no on both of those. I would focus on communications. I would focus on consumer discretionary. No, I would focus on tech. Right. XLC, XLK. Right. QQQ. And even these don't look necessarily awesome. And that's the conundrum for this market, right? Which time frame do we focus on? And these are all daily time frames, by the way. Except for Yi's question where I took a look at the weekly. These are all daily. And ultimately what we want to remember is that looking at the daily right now may not necessarily give us the follow through that we need. Right? Looking at these right now are not necessarily going to give us the follow through. So that's where those 1 hours, those 1 hour swings are going to be really, really important, right? Those are going to be really important. So if we focus on, here we go. If we focus on the 1 hour time frames, and if we focus on those 5-minute time frames, and tomorrow we're going to get right back to the day trading. If you did not, by the way, gang, if you have not yet, and this is probably as good a place as any to leave it as we wrap up the show. If you have not yet, all right, I have a video called "Do This on Your Next Day Trade" over at my channel at Raghee Horner. So if you're watching the show from there, thank you as always. Check out "Do This on Your Next Day Trade." If you're on the Simpler Trading channel, cool. If you're on the Simpler Trading channel, check out the video I called "Do This on Monday." Do this on Monday, and in it I walk through a number of really important level sentiment reads that you can do manually, right? You can see them on my chart here in the blue, this blue dashed line. this blue zone. I showed you how you can do these manually and get an edge on follow through and direction. These are sentiment reads. So between the these are, we can automate the blue zone, what I call the Pingala. The previous session close, easy enough to draw, and then everything else is automated. So check out that video, and I walk through everything. Look, gang, as I like to say, there's no mythical unicorn magical levels on my chart. I will always tell you what these levels are, how I calculate them, and why I use them, right? The automation is a luxury. The automation is, well, even more than a luxury. The automation is speed, accuracy, and quickens the learning curve. We've got to know what it is to begin with, right? So I get into what these levels are on my charts so that you have a better way to start your morning with an edge, and start your morning with that edge being, what is the structure of the 5-minute time frame in terms of follow through, and where are those sentiment reads? So check that out. A really helpful video for those of you that are learning to turn the corner on your day trades. Day trading last week was challenging, but I don't suspect it's going to be challenging for long, especially if we continue with this kind of volatility. I'm normally on non-farm payroll. I will usually tap the brakes on my day trading, mainly because there can be a lot more outsized volatility, which means risk. However, after looking at Friday's action, I'm very excited about tomorrow. So if you haven't already, check out what we're doing in the Sector Secrets Mastery, sectorsecrets.com. Tomorrow, gang, the Top Tier Outlook newsletter will be an afternoon edition. And in the meanwhile, enjoy the rest of your evening, the rest of your day, wherever you may be. I'll see you tomorrow for Charts and Coffee.